The JMF Advisors Show is a podcast for business owners, C-suite executives, and entrepreneurs who are looking to build, grow, or even exit a business.
We bring in some of our best financial advisors to interview experts on business best practices, hot topics, and sprinkle in some tax and accounting help.
If you're a business owner, startup founder, CFO, or just starting your side hustle, this podcast is for you.
Hello, and welcome to the JMF Advisors Show. We have another great topic for you today. I'm Rachel Taylor, and with Jameson Money Farmer, and I'm joined today by Kim Smith. We chair the tax department at JMF.
We are the tax department chairs.
That's right.
I didn't say the whole thing.
No, we're the chairs. And so we have, what are we talking about today?
Well, I think several times a year, I know you probably have it, I have it, and most of our people who have clients have this question come up often, and it is, I'm hiring someone in my business, but I don't want them to be an employee. I want them to be an independent contractor. Or how much do I have to pay someone before they're considered an employee?
Oh, right.
So I thought it was very important that we kind of get this out here of why it's important to classify the people who work for you in the correct manner, and also how you determine if someone's an employee or an independent contractor.
Yeah. Well, let's start there. How do we know?
Well, there are some common law factors that have been used for years to determine whether I'm using my notes on my phone, whether an employee is, whether a person is an independent contractor, and they're called the list of 20 common law factors. And we're going to actually post those in the notes of this episode so that you can read and look at a copy of yourself. Now, a person doesn't have to meet all 20 of the qualifications. Just meeting a few of them might swing them to employee status rather than independent contractor.
Okay.
And once you start looking at this list and looking at the factors, it all comes down to how much control the business has over this person that is working for them. In other words, are you telling them when to come to work? Are they using your materials? Are they getting an hourly rate? Are you providing them with specific instructions on what to do? Do they work regular business hours?
Yeah.
So I'm going to kind of go through this list a little bit, and I'm going to go back to say that if they are doing all those things, they're leaning more toward an employee because they're under your control.
Right.
An independent contractor, on the other hand, is going to, your business hours mean nothing to him because his job is going to be performed in his time frame. It's not going to be performed in your time frame. Also, he's going to realize a profit and loss over what the job that he does for you.
Yes.
You're not going to have any. He's going to use his own materials, and he's not just doing this for you. He's not at your beck and call.
Yes.
He is doing this for multiple other clients. You're just one of his customers. So I always like to use the example of a custodian or a janitor. Mm-hmm. If you have someone come into your office and they clean at night when you're not there, or they clean whenever they want to, they have their own schedule. Maybe you help them set a schedule, but if he doesn't make it that day, he can come the next day or whatever. And he is doing this not only for you, but he's doing this for 200 other people or 20 other people or 2 other people.
Yeah.
And he's using all of his own materials, and you're paying him a flat fee.
Yes.
And you have a contract with him that this is going to be our maintenance agreement for a year. You don't have to have all of those. But to me, that evidence really sways you to you need to be an independent contractor.
Yes. As opposed to someone who's at your office all the time.
Right.
They only work for you.
Right.
Kind of thing. Yeah.
Right. So I could see like an office that has, let's say they have an entire floor and they need someone there all the time, cleaning up messes and cleaning space. And they work 8 to 5 just like everyone else, and then they're getting paid whatever the going rate for that type employee is per hour.
Yeah.
They're not getting paid for this job. Then that person is going to be an employee rather than just and they don't work anywhere else. They don't do this for anyone else. So their level of income is coming from you, not from what they're making less the cost of their expenses to
Yes.
do that job.
Yes. An important distinction. Yeah.
So I think people, if they could just read that list of, they're going to come to the determination. And look, I know we know that you want the answer that they're not an employee,
Right.
but it's important to get the classification correct, because the IRS can come in and say, or the Alabama Department of Labor,
Mm-hmm.
or the Alabama Department of Revenue can come in and say, yeah, these people right here, these 5 people who work for you, they're all employees, and they're going to make you go back and pay the tax that was not withheld properly from their checks. And then you're going to get a penalty for failure to deposit your payroll taxes timely. And then you're going to have interest, and you're going to get a failure to file your payroll. I mean, it adds up very quickly. Same with if they're a contract laborer and you do not provide them a 1099, which we've alluded to in a previous podcast about who needs to get a 1099 and when.
Right.
So those payroll tax audits are nasty. And if we'd have just set it up correctly to begin with, there wouldn't be a problem. Sure, it's a headache, but there are software, your software now, if you know, a lot of people use QuickBooks or
Right.
QuickBooks Online. You buy the payroll subscription, you get the information in there correctly to begin with, and that's it. You know, you just give the person a check.
And then you don't risk having to
Right.
go through this audit and not only that, but having to pay penalty upon penalty
Right.
for all these different things that you've missed.
Right.
It makes it definitely not worth it
No.
to
Yeah.
not go through this exercise on the front end.
Right.
And like you said, you don't have to go through it alone. You know,
Right.
People like us can help. and-
Yes, and we have a client accounting services department that's all they do is payroll and sales tax. Well, I don't mean that like that.
Yeah.
I mean, they do.
They specialize.
They specialize in
Yeah.
this though, and even if you're like, well, I don't want to pay y'all to do it all. Well, you could pay us to help you set it up correctly, and then the system's automated. So at the end of the day, you're just going to be entering in the number of hours, and it's
Right.
going to spit out a check. So it's definitely worth that investment because, like I said, the penalties are steep, and there's not a lot of forgiveness
Right.
on those penalties.
And the IRS and the state can easily track all this because
Absolutely.
they've got W-2s and 1099s and they know what's going on and they can see.
Yes. Not to mention, you know, if you have a true employee and you're treating them as contract labor, that person is going to have to pick up that 1099 on a Schedule C and pay those FICA and Medicare taxes on their own.
Yep.
And if they're truly, you know, it's not a good look for you to make them have to pay both of those.
Right.
Right. Yeah.
Right. If they're misclassified,
Right.
then yeah, they're
That
losing
just
out.
if you misclassify someone, and let's say they're they get paid a nice amount of money, you know, a lot of these audits, payroll tax audits, in my opinion, are sparked when you have a whistleblower that is mad that they're having to pay all these taxes that they weren't aware that they were going to have to pay. Maybe they've always been an employee, and so they've always gotten a refund at the end of the year.
Right.
And then some poor souls having to tell them that they owe 15.2% on top of the income tax, on top of the fact you didn't have any expenses to go along with this income that you got from the 1099. So,
Yeah.
you know, it's just not, it can be very unpleasant if people don't take time to make the correct determination of what the classification of the person who is working for you is.
And this can affect a variety of industries.
Yes.
We see it in construction, but we see it with physicians.
Yes.
I mean, we see it with all kinds of different industries. So there's not like a safe industry that nobody looks at here.
No.
It's all subject to inspection
Right.
as far as that goes.
Well, that's all I wanted to talk about. I think this might be helpful for people who are starting a business and maybe they have just gotten to the point where they need to hire someone and they're trying to justify
Yes.
not making them an employee or making them an employee, and then what they need to do afterwards. And like I said, we can help you set all of that up, and we'll get started right to begin with. And as you grow, you won't have those growing pains anymore.
Yes. So check out that list
Yes.
that's going to be in the show notes.
Yes.
And give us a call.
That sounds great.
We can help you. Well, thank you for joining us today on the JMF Advisors Show. And don't forget to like and subscribe wherever you listen to podcasts, and find us on YouTube. See you next time.
Bye-bye.
Bye.
If you would like us to help your business or would like to suggest additional podcast topics, simply send an email to info@jmf.com.
And don't forget to subscribe to our podcast on YouTube and your favorite audio podcast apps.